Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about an interesting auto ancillary play, that is Minda Industries, which have a very stable business and is doing well in the market. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. So about Minda Industries, this is a company that was established in 1958. It is an auto ancillary play, and it is a part of the Minda group, which is into a lot of divisions apart from auto ancillary. But we will talk about their auto business. They produce automotive products like switches, sensors, acoustics, lighting, fuel cap, etc. Uh, it is divided into six divisions. So the auto ancillary division itself is divided into six divisions, like as I said, switches division, sensors, acoustics, lighting division, and they were established between 1988 to 2005 2007 period. Between those periods, that they hyphened off into different divisions, which was more efficient, which they thought will be more efficient for the company. It has a worldwide presence and is expanding on a yearly basis. They have presence apart from India in 10 countries, three or four of them in Europe, like Spain and Italy. So they have quite good clients in Europe, and that's why they're getting very good business out of there. So let's look at the numbers. The sales were up 7% year on year, which is interesting even in difficult circumstances, 1440 crores. And the operating profit, I'm not talking of the net profit, but the operating profit was flat at 171 crores, although net profit was down around 25%. But we'll talk about operating profit because net profit also includes depreciation, interest, etc. That we'll talk about in this video later. But the operating profit was flat, which was commendable, because companies like Motherson Sumi and other companies which are working or are doing business abroad are not doing that well in terms of even on the cash profit front or the operating profit front. So they were flat and not had much loss, was pretty good. The problem has been the debt, which has increased from 80 crores last year to 364 crores in FY19, and probably that has led to a high interest cost, which has led to the net profit going down. So the company has to look at that, or it needs to curtail if the expansion of debt in their books, and probably hold it at this level. It would be nice. The margins have remained flat. This is because the profit in the end has not come in that well, and the company is currently trading at 32 times earnings, because it has run up in the last 3 months. So the stock has run up in the last 3 months. I'll discuss about the reasons later on, but currently it's trading quite expensive compared to other auto ancillary. But the same thing is there, that the company has done well over the last 1.5 years, where other companies have really struggled. So that's why probably the valuations. So, what has been the reason for the stock fall from the top? The slowdown in the Indian and the global economy. At its peak, the stock was nearly double from what it is at the moment, probably 2 years back. So, the global economy slowdown, especially the European economy turmoil with Brexit, and the other countries not doing that well as they were doing, say, a decade ago, has really hurt these companies and Minda industry itself. But I believe it is a cyclical slowdown, and this slowdown has been hurting the company for the last 1 year, and probably would do in the next 4 to 5 quarters. So probably the pain would continue for the next 5-6 quarter, and that I said same for Aisher and Ashok Leyland and other companies as well, that at least for the next 5-6 quarters it doesn't look like that things would improve a lot on the ground. But what is good in Minda industry is that their business is expanding, and they're getting orders from abroad as well as here in India, and the products that they are making are very essential in the makeup of a car or a four-wheeler. So in that regard, and they have quite a good market share uh, in those fields. So in that regard, the company has been producing very good numbers. The orders have reduced from what they were, say, 3 4 years back, and that has also hurt the numbers. And the valuations in December 2017, when I said that the stock was trading pretty well in early part of 2018, was pretty lofty. So if you take into consideration the 10 rupee 20 paisa EPS of today, the stock might have been trading at 50 55 times, which is extremely expensive for an ancillary play. um, So it has run up over the last 3 months, as I mentioned. So why it has run up is because of the last quarter numbers, which have come up flat rather than declining a lot. So the stock was bought a lot. Plus, the index fell a lot during April, May, and then the small cap index, and then the recovery began in June. So these stocks went up quite sharply, and the announcement by Nirmala Sitharaman with respect to the tax cut has also helped the company, because it was paying tax around 29 to 30%. So it would get reduced to 24 25%. So that would also help. And so 2 3 Philips took place from outside, and that helped the company or the stock to go up sharply from its lows. I believe that it is a very good stock to accumulate at the moment. Not that you have to buy whole hog, but over the next 6 quarters, say 1.5 years, this is October, so March 2021, till that time you can accumulate the stock. It would go up, go down, and all that, because results could be iffy over the next 2 quarters, 3 quarters, and hence you can accumulate at different levels, so you'll have a very good average buy price. Why is that? Is that they have a very good client base, especially in Europe. And probably this is going to get better over a period of time, because it is not a very huge company at the moment. It is just 7 8 thousand crore market cap company. It has a very high promoter holding. Now this is interesting, with pledged shares going around and pledged shares being sold in at Yes Bank and other companies, and we have a lot of issues with promoter holding. This company has a 70% promoter holding, with around 20% holding of DIIs, FIIs, mutual funds, etc. So around 85 to 90% are with strong hands. So very good company to buy. It is a top ancillary play, so it is not that it is an auto ancillary and nobody knows about it. It's a very strong ancillary stock with high net worth individuals having put in their hard-earned money. Numbers have remained decent even in difficult circumstances, and that's why I believe that one can accumulate. And the cyclical slowdown in the Indian economy or the global economy would turn around. So this is a slowdown in the auto industry, especially in India. So this would turn around in the next 2 2.5 years. It has nothing to do with the Indian economy and all. In fact, auto industry doing well helps the economy, the Indian economy itself. So it is not like capital goods, which is highly intensive. So you have to take into account. So once the cyclicality changes, then the company would do even better. So this was my video on minda industry. I've been struggling with putting up videos, because I've been going around to home and the hospital. So once I get things in order at home, I'll put up videos every day. Please like and subscribe my channel, hit the bell icon, so that you can get my videos straight away when I post it. Thanks a lot for watching.